So you cut your price target down to 240. The stock trades at about 226 right now, so you're not seeing a lot of upside movement. You also cut to neutral on your rating. What happened? The stock hasn't moved a lot in the last 3 months, but why now?
Well, good morning, Frank. Thanks for having me. And you're right. This change of de minimis, which went into effect in May for China and Hong Kong, went to the rest of the world at the end of August. And that's going to be a big issue for Fedex. We're going to see, and UPS, right? We're going to see a lot of volume coming out. We're looking for revenues to basically be flattish, margins to be flattish. This is going to have reverberations of continued impacts as we go forward, not just for this quarter, but for their outlook. And so you still have a lot of volumes that are coming out of the market with the slowdown, and this de minimis is just compounding on that.
All right, so we saw a big pull forward of freight in the beginning of the year to try to get ahead of tariffs, and then obviously we saw the tariffs taken away for a bit of time. Now we're getting ready for the holiday season. A lot of retailers, they kind of fill up their warehouses around late September, October. And in all fairness, a lot of those holiday sales start sooner now in October, so they have to fill up those warehouses. How are tariffs going to impact Fedex and just that trend? Does it change the trend in a meaningful way that's going to impact the upcoming quarter or maybe has impacted this quarter?
Absolutely. I think what we saw, exactly what you said, we saw a lot of pre-shipping come in. Some of those goods were moving, but this also de minimis thing changes when you're talking about the express business, about the timing of packages. If you can't get it sent by mail, you now have to go to the store. So now you're just having a change of patterns. And so we did have an early season. We had a little bit of back to school season, and the retailers then told us right after kind of really pulled back. So we're going to see the after effects of that week back to school season or post back to school season go into an early peak season, which means we're going to see some flattishness. We saw that with the goods come in from ship, then it usually goes by truck and rail, and then air freight starts to move. We're going to hear today from Fedex aftermarket about how that early start to peak season is, and we think it's going to be fairly muted.
Muted,
Yeah.
really? So why would it be muted if we've already seen the pull forward and right now it doesn't sound like warehouses are that full? I've been talking to some different companies. Warehouses aren't that filled up. Why aren't we going to see a big rush of goods coming in for the holiday season, specifically for Prime Day, Target Circle Day? You know, the sales, I can name them all. I can't actually name them all. If I could, I would have. But there's a number of sales from big retailers going to be coming up in just a few weeks. Why aren't the warehouses going to be full?
Well, when you get those kind of sales, that's telling you where the state of the retailers are, right? They want to sell goods at whole price. When you start seeing more and more sales, that means there's pressure that the sales aren't good enough. So if you do start to see those, that's an increasing sign that they need to move some freight. So I think we got the goods in early, but yet you're seeing a muted demand. I think that's really key to the peak, is just the muted demand.
When I saw your downgrade, I was really curious why it's coming on the heels of a Fed rate cut, because this Fed rate cut should be excellent for Fedex.
Yeah.
Specifically, it's higher margin business right now. It's going to spin off its trucking business, but for its higher margin business in trucking, a rate cut's supposed to be very good for manufacturers. We also are coming off the Trump tax and spending bill, where we're going to see, we're expecting to see at least, a buildup of CapEx, again, good for Fedex, and bonus depreciation, again, good for Fedex. So on a rate cut, on the heels of it, you're cutting the price target and the rating.
Well, we cut it ahead of it, which you're right. I think those are things that can, these are things that can start to spike demand. I agree with everything you named on the bill and all these things with increasing investment, bonus depreciation, which should help. But yet we're still looking for margins to be down 100 basis points at the LTL segment, which they're getting ready to spin out next May. You've continued to see this pressure. We do a truck shipper survey, which we've talked about in the past, which has showed us shippers' view of outlook of demand remains exceptionally muted. It's averaging the same as the prior 3 freight recessions. So we've got to get demand building, and these are things that are starting to build enticement for demand, but it also tells you the reason why we're getting the rate cuts is how weak that backdrop it remains.